Hi everyone! Today, we're diving into an important topic, financial decisions that are best made in January. Why January? It's the beginning of the year, a clean slate to set your financial intentions and make decisions that will pay off for the rest of the year and beyond. Grab a notebook because this is packed with actionable tips. Let's get started. This is Wealthlocity. Here you create, protect, and grow your wealth fast. The first financial decision you should focus on in January is setting your annual budget. The start of the year is the perfect time to analyze your past spending and set a realistic budget for the year ahead. Begin by reviewing your bank statements, credit card transactions, and any major expenses from the previous year. Identify patterns, both positive and negative, in your spending habits. Are you overspending on dining out? Did you manage to save effectively last year? Break down your expenses into categories such as housing, transportation, groceries, discretionary spending, and savings. Next, determine how much you want to allocate to each category. Use a budgeting tool or app to automate the tracking process. Remember, a good budget also includes room for unexpected expenses, so don't forget to add a miscellaneous category. Another critical decision to make in January is reviewing and updating your financial goals. Think about what you want to achieve this year and beyond. Are you aiming to save for a down payment on a home, build an emergency fund, pay off high-interest debt? Be specific about your goals. For example, instead of saying, "I want to save money," set a target like, "I will save $10,000 by December 31st." Break this amount into monthly milestones to make it manageable. January is also a great time to reassess long-term goals like retirement. Consider whether you're on track to meet your savings targets. If not, make adjustments by increasing your contributions or seeking additional investment opportunities. Maximizing your retirement contributions for the previous year is another smart move to make in January. The IRS allows contributions to traditional and Roth IRAs for the prior tax year until April. But starting in January gives you more time to make these contributions without the last-minute rush. First, check how much you've already contributed. The limit for most individuals is $6,500, or $7,500 if you're 50 or older. If you haven't maxed out, prioritize this contribution, as it can lower your taxable income and accelerate your retirement savings growth. Review your options, and if you're eligible, consider setting up a recurring transfer to make the process seamless. January is the ideal time to adjust your tax withholding. If you owed money or received a large refund last year, it's worth revisiting your W-4 form. Large refunds often mean you're giving the government an interest-free loan, while owing money can cause financial stress. Use the IRS tax withholding estimator to calculate the appropriate withholding for your situation. Once you've determined the right amount, update your W-4 with your employer. Adjusting early in the year ensures the changes have the maximum impact on your monthly take-home pay. January is an excellent time to plan your charitable contributions for the year. By creating a strategy up front, you'll avoid scrambling to make last-minute donations in December. Start by identifying the causes or organizations that align with your values. Decide how much you're willing to allocate to charitable giving. You might choose to donate a percentage of your income or a fixed amount. Planning also allows you to explore tax-efficient giving methods, such as donating appreciated stock or contributing to donor-advised funds. Keep a folder or digital file for all donation receipts to streamline tax preparation. Rebalancing your investment portfolio is another decision that's best made in January. Over the course of a year, market performance can cause your portfolio to drift away from its target allocation. For instance, if stocks performed well last year, they might now comprise a larger percentage of your portfolio than intended. To rebalance, start by reviewing your current allocation against your desired mix. If adjustments are needed, sell assets that are overrepresented and buy those that are underrepresented. Rebalancing helps manage risk and keeps your investment strategy aligned with your goals. If you're uncertain, consult a financial advisor to guide the process. And January is a perfect time to review your insurance policies. Changes in your personal or financial situation, such as buying a home, having a child, or starting a new job, can affect your coverage needs. Review policies for health, life, auto, home, and disability insurance. For life insurance, verify that your coverage amount aligns with your family's current financial needs. For health insurance, check if your plan covers anticipated medical expenses, such as surgeries or treatments. Compare quotes from multiple providers to ensure you're getting the best rate. Update beneficiaries on your policies if there have been any major life changes. After the holiday season, many people find themselves with higher levels of debt. January is the ideal time to create a repayment plan. Begin by listing all your debts, including the balance, interest rate, and minimum payment for each. Choose a strategy to tackle your debt, such as the snowball method, starting with the smallest balances, or the avalanche method, focusing on the highest interest debts. Set specific repayment goals, like paying off your credit card by July. If possible, allocate extra funds from your budget toward debt repayment. Automating payments ensures you stay consistent. Setting up automatic savings is one of the simplest yet most effective financial decisions you can make in January. Open a high-yield savings account if you don't already have one. Decide on a monthly savings amount and set up an automatic transfer from your checking account. This ensures that saving becomes a consistent habit rather than an afterthought. For additional motivation, name your savings accounts based on their purpose, such as vacation fund or emergency savings. Over time, these small, consistent deposits will add up significantly. January is a great time to plan for major purchases you anticipate making later in the year. Whether you're thinking of buying furniture, appliances, or even a car, having a plan in place can save you money and reduce stress. Start by researching the typical costs for these items and identifying any seasonal sales cycles. Set a realistic savings target and timeline. For example, if you're aiming to buy a new laptop in July, calculate how much you need to save monthly to reach that goal. Planning ahead also gives you time to shop around and find the best deals. January is a great time to audit your subscription services. Go through your bank and credit card statements to identify recurring charges. Do you still use all the services you're paying for? Cancel any subscriptions that no longer add value. For services you want to keep, consider reaching out to the provider to negotiate a lower rate. Many companies offer discounts to customers who ask, especially if you're considering canceling. This simple exercise can free up money for other financial priorities. Checking your credit report is essential for maintaining a strong financial foundation. January is an ideal time to do this, especially after the busy holiday shopping season when fraud and errors are more likely to occur. Obtain free credit reports from annualcreditreport.com and review them for inaccuracies. Look for unfamiliar accounts, incorrect balances, or missed payments that you know you made. If you spot any errors, dispute them immediately. Regularly monitoring your credit helps protect against identity theft and ensures your credit score remains strong. Building an emergency fund is one of the most important financial steps you can take. January is the perfect time to reassess your emergency savings. Aim to save 3 to 6 months' worth of essential expenses. Start by calculating your monthly necessities, rent or mortgage, utilities, groceries, and insurance. Divide this total by the number of months you want to cover. Once you have a target amount, automate your savings contributions to make consistent progress. Consider directing any windfalls, such as bonuses or tax refunds, straight into this account. Many people overlook the full range of benefits their employer offers. January is a great time to review these perks and ensure you're maximizing their value. Check your retirement contributions and make sure you're contributing enough to get the full employer match. Review health insurance options, including FSAs and HSAs, to plan for upcoming medical expenses. Some employers also offer professional development funds, gym memberships, or commuter benefits. Use this time to familiarize yourself with what's available and adjust your elections if necessary. Finally, start preparing for tax season in January. Gathering your documents early ensures you won't be scrambling as the deadline approaches. Create a folder, physical or digital, to store W-2s, 1099s, and receipts for deductible expenses. If you're itemizing deductions, make a list of categories such as medical expenses, charitable donations, and business costs. Consider using tax software or hiring a professional to ensure you maximize deductions and credits. Starting early also gives you time to address any surprises, such as missing forms or additional payments owed. And there you have it, 15 financial decisions to make in January to set yourself up for a successful year. Don't let these opportunities slip by. If you found this video helpful, give it a thumbs up, subscribe for more tips, and share it with a friend who's ready to take control of their finances. Thanks for watching, and I'll see you in the next video with more money in your pocket.